We're good to go.
There we go. Looks like we're slowly but surely getting more and more people into the room. At first, I thought it was just going to be me and you, Mike.
And that'd be just fine. Trying to get a little bit more light. There we go. That's a little better. All right.
Good afternoon to you. How are you? Are you staying dry?
I'm totally fine, although it felt like a hurricane. I live in Marina Del Rey, and it was quite intense yesterday. And yourself?
Same in Long Beach. Same. And then it would be sunny. I kind of felt like I was like in the South or Florida or somewhere.
Exactly.
All right. Well, I know you've got a presentation and I'm going to go through some info. So let me go ahead and share my screen. Get these slides going. There we go. Mike, can you see my screen okay? My slides?
Yes, we're good. Go ahead.
Okay, perfect. So good afternoon, everyone. Thank you for joining us. My name is Lauren Simpson, and I am with the Small Business Development Center, or the SBDC. We are a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have taken care of all of our fees. So be sure to get in contact with us. So for the Los Angeles network, which is the network that myself and Mike represent, we have locations throughout the Los Angeles, Santa Barbara, and Ventura counties. Now, if you look on the screen in front of you, you'll see waymarks where our center physical locations are. You'll see that we're in Camarillo, Santa Clarita, Pasadena, and Laverne, throughout Los Angeles, the South Bay, as well as down into Long Beach. So again, if you are within Los Angeles, Santa Barbara, Ventura counties, please be sure to get in contact with us. You'll want to do so because we offer no cost business advising. And so you're able to meet one-on-one currently via Zoom or a phone call with one of our business experts. And so you're able to sit with amazing business advisors like Mr. Mike DiDonato, as well as GB. You can also sit with several of their colleagues, and we're talking about people who have expertise in various industries. I'm talking construction as well as tech. If you're looking to create a marketing plan, or if you are just starting out and looking to create a business plan, we can help you. We also offer free virtual trainings. And so those are comprehensive workshops that allow or assist your business in adapting and growing and starting. Oh, there we are. So be sure to get in contact with us today. For the LA area, the LA, Santa Barbara or Ventura counties area, please go to 866-588-7232 and someone will assist you there. Or you can go online, smallbizla.org/new client. Now, if you've reached us outside of the Los Angeles, Santa Barbara, or Ventura counties, please go to americassbdc.org/find your SBDC. So Mike, I'm going to quickly stop my screen share and pull up another screen. Right. As you know, we have a really cool grant program going on right now that we're assisting the County of LA with.
Yes.
Let's see, let's bring it up. Okay, Mike, I'm going to share my screen one more time.
Go for it.
Can you see it okay?
We're good.
Okay, perfect. So as you guys can see, it's a grant opportunity presented by the Department of Economic Opportunity, which is the County of Los Angeles, or a department with the County of Los Angeles. And the name of the grant program is the Economic Opportunity Grant Program, or EOG. Here are the sponsors and those partners that are involved in the grant. And then if I scroll down, you'll see that it's both phases are open now. There are two phases, phase 1 and phase 2. And if I continue to scroll, again, this is the home page, which I'll be sharing a link to in the chat. You'll see that it's for eligible micro businesses, small businesses, as well as nonprofits. Now for phase 1, those are going to be for micro businesses. And for phase 2, it's micro, small, as well as nonprofits. I'll scroll down here. So phase 1 is, now it says March 25th, but we're hearing that it might be extended. So stay tuned for that. But if you qualify for phase 2, you can see that it goes through May 20th. Again, if I continue to scroll, you'll see tons of information related to both phases. You can either apply now or get application help. This one is really important. So if I go to the top of the screen, you'll see home, prepare to apply, get help, and apply now. That apply now takes you directly to the application. So if you know that you're prepared, you have your documents in order, and you are ready to apply, go ahead and click there. But if you're looking to prepare, meaning you want to know eligibility criteria as well as what the program is as a whole, as well as the application checklist, you can find it here. And if I quickly scroll, you'll see it. Here's the checklist, eligibility guidelines for phase 1 as well as phase 2. And then ineligible entities. And so here's that list here. So if you are a proprietor with any of these sorts of businesses, then unfortunately this grant isn't for you. But if you are not, please continue to scroll. You'll see the document checklist here.
It's quite extensive.
Yes.
Can you go back up to the checklist?
Here? Let me keep going.
Small document checklist.
There we go.
Yes. So if you intend to apply for this, please be sure to have all your documents together. Otherwise, you have to go back and forth. So make sure you have everything ready to go because it is a lengthy application process. Correct, Lauren?
Correct.
Okay,
that is correct, but you get everything in and you have, you meet all the eligibility criteria, you take your time and you answer the questions properly, upload the documents or necessary documents, excuse me. Then, I just saw a question in the chat as well in terms of a timeline. So upon submission, we are advising that it may take 6 to 8 weeks to hear back. If you receive a notification quickly from Lindustry relating to an item missing or any kind of denials, then please make sure you're monitoring your email boxes. One quick note though, if your application is denied or rejected, you have 5 days to contest. So again, there are 5 days for you to contest upon receiving a denial. Let me quickly go to get help, Mike. This part is really important. We have informational sessions. We have daily, except Sundays, info sessions. And so you're able to hop onto a webinar. There are webinars specifically for nonprofits on Mondays at 9 a.m. in English, 1:30 p.m. in Spanish. We have Spanish webinars for the program as a whole on Mondays and Wednesdays at noon. And then we have sessions at the same time on Tuesdays and Thursdays in English, And then for live support. So if I click this button here, if you have any kind of application questions, please give these guys a phone call and they'll definitely help you out. And then if you've already started the application and you have some tech questions, you can reach out to this phone number here. It's an 866 number. We also have video tutorials on how to do certain things that are related to the application. So if I continue to scroll, you'll see that they're in Spanish as well. And then we have these cool application guides. Now, what I didn't mention, Mike, was that, okay, first off, you can see all the languages
There's
here.
Languages, right.
If I hit that button and go up to the top, you'll see this button on the far left. It says English currently because that's the translation I have on the site. But we have all these other languages as well. Excuse me. If I click it, now everything is in Spanish. Now, one thing to mention that though this website and our any assets you might see via like a flyer or social media content can be in different languages. When you go to actually apply, the application is solely in English. So, and you need to be the person who is applying because there is a portion where you're going to have to do like a facial recognition. And we want to make sure that you aren't rejected because, it isn't you. And then again, you can click here and it's apply now. And you can go on in there and again, if you have any questions, just reach out to us. We have that phone number. You'll see it here. There's tech support. So They have it listed here because you're already in the, the application and getting started. I've got it highlighted right here. But I'll put all the information into the chat. That means the contact phone numbers as well as a link to the grant program itself. And if you have any questions, just join us for one of the webinars that we hold weekly. I think that is it. Mike, did I leave anything out?
A couple things. So is this funding available for California residents only?
Uh-oh. I'm sorry, Mike, say it one more time. I'm having
Is
tech
this,
issues.
no problem. Is the funding available for California residents only?
Yes, it's an LA County grant.
Is it available for those in the city of Los Angeles?
Okay, so for phase 2, no, you cannot be located in the city of Los Angeles. If you qualify for phase 1, yes, you can. If you are located in the city of Los Angeles, you are ready to go. The reason why those who are located in the city of Los Angeles don't qualify for phase 2 is because there has already been funding out of the same bucket of money for those people. I don't remember the name of the grant program, Mike. I don't know if you do, but this current.
Yeah, the city had its own program in place a year or so ago. And however, there's going to be a phase 3. So the phase 1 is for micro businesses that were newly started, essentially, right?
Correct.
And that ends March 31st, correct?
It was. Here
March
we go.
31st. Phase 2 ends May 20th, so you have a couple of months. It's $15,000 if you have revenues under 100,000, okay, in those taxable years. And then there'll be a phase 3, which will be higher amounts, but they haven't announced when phase 3 applications will open.
Yeah, Mike has more news than I do.
No, I'm reading it right there. Now, what about real estate agents in our loan offices, independent business people, you know, will they qualify? So we need to know who qualifies for these grants.
So again, here are the eligibility guidelines, but this is the list you really need to pay attention to in eligible entities.
Right. So if you're publicly traded, we're going to be talking about publicly traded corporations in a minute. Corporate franchises are ineligible. Financial institutions, lenders, banks, no, you're not eligible. Insurance companies are eligible. No private social clubs, no pawn shops, no palm reading and astrology, which is fascinating. No nightclubs, liquor stores, no lobbying firms, no gambling activities, no trailer storage and junkyards, no adult entertainment venues. This is important. No one dealing in marijuana or cannabis, because the federal government still has a ban against that. It's against federal law. No political activities, no gun or ammunition stores, good, and no business that's been debarred, suspended, etc. So those are all the ineligible folks.
That's correct.
Okay.
All right, Mike, I know you have some juicy content for us today, so I'll go ahead and stop my screen share and kick it over to you.
Great. So I'm going to share my screen, and we're going to be talking about capital markets for small businesses. And this has to do with exchanges like the New York Stock Exchange and NASDAQ, as well as something called the pink sheets. If you have not heard of the pink sheets, don't worry, you're going to get an education. So what is a capital market? It's a place where you can buy and sell stocks and bonds. That's what a capital market is, okay? And so this is a place where you can go to get financing for your company. So we've got a lot of people who are starting up early stage saying, look, I need money. I need to go have this conversation almost 3 times a day. I need to buy a truck. I need to expand my warehouse. I need to do more marketing. I mean, a lot of our activity has to do with helping people gain access to capital, because we're funded through a grant through the SBA, a grant through the state of California, and we want to help you get money. There's also sources for funding through crowdfunding, and there's 4 different models for crowdfunding. One other way of getting funding is with the capital markets. Now, the vast majority of people that we speak to would not be ready to go to the capital markets, but I thought we'd dive into this anyway, because at some point you may be willing to jump into the capital markets. So let's give a brief history here. Back in 1792, 24 stockbrokers got together to set up the New York Stock Exchange. It's called the Buttonwood Agreement, and you actually see it on your screen with the signatures. And this actually kind of dates back even further, because in the 1600s, the Dutch founded New Amsterdam, now known as New York, and they built a stockade on the street, and that's why it's called Wall Street. And then there was something called the Compromise of 1790, which cemented Wall Street's role as the nation's financial capital. So that's where we get this started. Okay, and then Alexander Hamilton, who was the first Secretary Treasurer, wanted to pay back Revolutionary War debt using federally issued bonds. So his vision included the federal assumption of the debt from the Revolutionary War. He created the central bank and support for indigenous manufacturing. And this laid the framework for the New York Stock Exchange and enabled markets to flourish. Because that's the brief history. Then there's something called NASDAQ. NASDAQ was established back in 1971. It's an acronym for the National Association of Securities Dealers and Automated Quotations. No one calls it by its full name. It's NASDAQ, okay? It was started on February 8, 1971 as the world's first electronic stock market. At first, it's just a quotation system, and there was no way to perform electronic trades. By the way, this is coming from Wikipedia. Eventually, it assumed the ability to do trades by executing something called over-the-counter trading. And as late as 1987, NASDAQ was still commonly referred to as OTC in media reports and in the monthly stock guides. Now, over the years, it has done a hell of a lot more volume. And in 1981, NASDAQ traded 37% of the US securities market. By 1991, it had grown to 46%. In 1992, it joined with the London Stock Exchange to form the first intercontinental linkage of capital markets. In 98, it became the first stock market in the US to trade online. So that's a bit of a history around NASDAQ. It's kind of a newer than New York Stock Exchange. So New York Stock Exchange is hundreds of years old. But we have another platform, something called over-the-counter markets, OTCs. There are three main stock exchanges that list over-the-counter stocks. These are stocks that would not qualify to be listed on the New York Stock Exchange or NASDAQ. By the way, other cities and other countries have their own exchanges. So there's something called the OTCQX, there's something called the OTCQB, and then the pink sheets. So the OTCQX handles businesses that are, let's say, more sophisticated. It's the top tier, has the highest reporting standard. OTCQB is often called the venture market, mostly includes companies in the developing phase. And then the pink sheets are for companies that are very, very early in the stage of their development and don't have a lot of trading volume, very little trading volume for that matter. However, there's an opportunity for you possibly to take advantage of the pink sheets or the OTCQB or OTCQX. Now, you may have heard the term pink sheets, and it comes from the actual usage of pink paper used in the early 1900s to print the quotations for stocks. The investment houses and the brokers traded companies over the counter for retail clients. So it was a tough time trying to find accurate bid and ask spreads for these companies. And it was often delayed by days or weeks. So out of this matters arose something called the National Quotation Board, the NQB. And the NQB set out to provide a comprehensive list for over-the-counter companies on a weekly basis. And here you see actual image of the pink sheets that were issued at one time. It's an historical image. And the term is still around. It's ubiquitous within the trading community. Now, there's some more history here about the pink sheets. The NQB was founded in 1913 by two people, and they merged together to form the NQB. And it added a huge dimension to people who were trying to buy and sell these infrequently traded stocks. Okay. And then it went to real-time electronic quotations in '99, and no longer printed out the pink sheets. Okay. It literally transferred from printed pink sheets to digital quotations. But as late as 1999, they were still printing the pink sheets. The AQB renamed itself to Pink Sheets LLC, then renamed it again and again. Now it's known as the OTC Market Group, OTCM, in 2011. And the transactions for the pink sheets are handled through this OTC Markets Group. Now, why am I telling you all this? Because you can take advantage of raising funds for your business through the pink sheets. So companies listed as pink sheets have virtually no requirements. They're not required to file with the SEC. They have no minimum financial requirements. They're not required to release any financial reports. And there's very few regulations. However, that doesn't mean you shouldn't. That doesn't mean you should not issue financial reports. You should, because investors, you need to be transparent with investors. Any questions about this so far, Lauren? Are we good?
No, not as yet.
Okay. So the OTC markets trades a lot of securities, over 10,000 securities, and over $400 billion in annual trading volume. And there's 3 different types of over-the-counter markets: the OTCQX, OTCQB, and the pink sheets. So there aren't a lot of requirements to get involved in this. Okay. Now, the vast majority of people that I talked to, if they chose to go to the pink sheets, would go to the lowest level. They wouldn't go to the OTCQB or the OTCQX. They'd actually call themselves a pink sheet stock. Okay. Now, again, some of this information is coming from Wikipedia. From there. So there's a lot of companies that are quoted on the OTC markets, including foreign firms. They quote through something called American Depository Receipts. I'm not going to go through that level of detail with you. Okay, just keep in mind that foreign firms can trade through the OTC markets. Okay, now, in addition, many closely held, extremely small, thinly traded US companies have their primary trading on the OTC platform. And they are current, and they have deliberately chosen to report to regulators such as the SEC, and are make ongoing quarterly and audited financial reports available through the OTC Markets Group. So just because it's not a requirement doesn't mean you shouldn't do it. And as a matter of fact, your stock price will benefit from the release of financial information if you ever get onto the pink sheets. Okay. Now, why do people go to the pink sheets? They either don't meet the requirements to go on the New York Stock Exchange or NASDAQ, or they don't want to pay the fees. It's quite expensive to go on those capital markets. Okay. Now, the SEC considers these over-the-counter stocks to be highly speculative and very risky. So if you intend to trade in the marketplaces, talk to your financial advisor, because it's extremely risky to invest in these pink sheet stocks. And oftentimes they're illiquid, which means you will not be able to necessarily trade the shares as if you were in the New York Stock Exchange or the NASDAQ. So be very careful if you choose to engage in investing in these businesses. We have a question. Oh, could you please answer the question in the Q&A later on regarding the grant? Please keep the questions in the Q&A relevant to what we're talking about. So there was something called the OTCBB. It was set up by the FINRA, Financial Industry Regulatory Authority, to provide trading information and quotation service. FINRA basically shut that down on November 8th, 2021. and there's something called the OTCQB, which has essentially replaced the OTCBB. So you might hear that term every once in a while, OTCBB. It no longer exists. The vast majority of the trading that was done on OTCBB and quoting is now done through OTCQB. And remember, there are 3 different over-the-counter marketplaces. There's OTCQX, OTCQB, and the pink sheets. Keep them straight in your mind. Let me go back to where I was. So the OTCQB is also called the venture market. It's the middle tier over-the-counter market for US stocks. It was created in 2010, consists mainly of early stage and developing US and international companies that are not yet able to qualify for the OTCQX, which is the next tier up. Never mind the New York Stock Exchange or NASDAQ. Okay. And as I mentioned, the OTCQB replaced the FINRA OTCBB as the main market for trading over-the-counter securities. Now, if you go to the if a company goes to the OTCQB, typically they would be reporting to the SEC. Although there's no minimum financial standards. And it often includes shell companies, penny stocks, and small foreign issuers. Let me move on from there. And then we have the OTCQX. It's the top tier of the marketplaces for over-the-counter stocks. It is operated by the OTC Markets Group. And they have more stringent, the stocks listed, they have more stringent qualification criteria than the OTCQB and the pink sheet. So companies listed on the OTCQX markets have to follow certain rules and criteria and are subject to SEC regulation. Okay. The 2 lower tier venues for OTC trading are the OTCQB and the pink sheet. So I want you to have this clear in your head. That's why I keep repeating it. Pink sheets, QB, QX. Keep them straight in your mind. Different rules apply for each one of those levels. And the lowest level is the pink sheet. So how does all work? So there's something called broker dealers, and they are trading stocks over the counter electronically. Okay. There is no trading floor. Like if you go to Wall Street, you go to the stock exchange, you can actually go onto the trading floor. There is no trading floor. Everything is done electronically. Okay. The pink sheet listed companies do not have the same criteria to fulfill as the companies listed on the national stock exchanges. And many stocks listed on the pink sheets are low price penny stocks. So they call them penny stocks for a reason. At one point, a penny stock was a stock that traded for under $1, traded in pennies essentially. Now that definition has been changed. A penny stock is a stock that trades for under $5 a share. And there could be a penny stock on the New York Stock Exchange and on NASDAQ, and there are. Okay, but there's still listing requirements. I think you have to maintain $1 share price on NASDAQ to stay listed. So here we go. In the past, penny stocks were considered any stocks that traded for less than $1. And then the SEC modified that to include all shares, no matter what exchange they're on, to under $5. And the SEC is the agency that governs the functioning of the securities markets. So here's the problem with penny stocks. They're usually associated with a lack of liquidity. You really cannot necessarily find others to buy that stock from you if you chose to go into the marketplace. It may take a while. Okay, there aren't a lot of ready buyers in the marketplace, and investors may find it difficult to sell a stock since there are not enough buyers. Okay, and because of low liquidity, investors might have difficulty finding a price that accurately reflects the market. So there are some risks here to investors, but there's some advantages too to investors, because you could buy a penny stock, and if that stock does well, as hopefully it does, you could profit greatly from it. So there are things to think about, there's pluses and minuses. From a company standpoint, going to the pink sheet, you have an opportunity to raise capital for your business to help grow it, to raise their stock price and benefit from that. Now, what you see here is the NASDAQ listing requirement. So some companies choose deliberately, even though they could qualify, not to go on NASDAQ are not to go on the New York Stock Exchange for the price, because it's very expensive to go on those marketplaces. But here's the requirements for to be listed on NASDAQ. You have to have, there's an income standard, there's an equity standard, there's a market value standard, or there's a total assets to revenue standard. You have to meet one of these requirements to get listed on NASDAQ. So under the income statement, you have to have income from operations of at least $1 million and stockholder equity of at least $15 million, and make available to the public at least over 1.1 million shares. And the market value of those shares has to at least meet $8 million. And you have to keep your bid price, the asking price for your stock, at $4. And you have to have at least 400 shareholders, and you have to have at least 3 market makers. Market makers are stockbrokers who you would engage to help you market your stock. They're literally called market makers. Then there's the equity standard. Well, the equity standard says your stockholders' equity must be $30 million or greater. Okay, and you have to have $18 million market value of publicly held shares. And then there's the market value standard, with a market value listed security is $75 million. And then we have the total assets to revenue standard, where your total assets and total revenue is $75 million, et cetera. So depending on what type of standard you meet, you could potentially go on NASDAQ, but honestly, it's a very expensive process to do an IPO listing on NASDAQ or New York Stock Exchange. And here's the requirements of the New York Stock Exchange. It's no one that I speak to, none of the people that we deal with would ever get off the New York Stock Exchange. It just doesn't happen because they never meet the standards. Okay, you look at the amounts you have to have. Shareholders' equity of $60 million. It's just, we don't run into those types of companies. Okay, so minimum share price of $4. Notice that. By the way, if a company has its share price drop below $4, I think it's for 2 quarters straight, they can be delisted from these exchanges, which is a real problem. So oftentimes what they'll do is they'll buy back stock in order to keep the share price propped up. New York Stock Exchange is $4. That's so they really don't want to deal with penny stocks, honestly. Now, the cost to go public, it's really high. Okay, you can see Pricewaterhouse did an analysis here. Depending upon the deal value, the percentage changes, and there's numerous investment banks on the deal. Of course, when you have more investment banks, it costs more money. By the way, investment bank is not a traditional bank. It's an investment bank goes out there to market your stock. Then they don't hold savings accounts. It's not a traditional bank. Okay. Myself and a colleague will actually be affiliated with an investment bank in the next week. So there's pre-IPO direct costs, there's pre-IPO indirect costs, there's post-IPO one-time costs, and there's post-IPO recurring costs. This is a lot of money, okay, just to go through all of that. And then there's the fees to be paid to get listed. Maximum fee of $295,000 to go on the New York Stock Exchange, plus a one-time charge of $50,000, plus an initial application fee of $25,000. Now, the minimum listing fee is $150,000 on the New York Stock Exchange. And by the way, this diagram assumes 100 million common shares being issued because there's a per share fee. Very expensive. There's listing fees, there's accounting fees, there's auditing fees, there's underwriting fees. NASDAQ has a different fee structure. Up to 30 million shares, the entry fee is $125,000 plus which includes a $25,000 application fee. And there's something called NASDAQ Capital Market, with up to 15 million shares, $50,000, including a $5,000 application fee. The annual fees for NASDAQ is $47,000. For New York Stock Exchange is $71,000. So these are very expensive exchanges to go on to, and which is why we never see the people that we are seeing through the SBDC never go into these exchanges. A little different when you go over counter. The OTCM marketplace, much different. So at the highest tier, remember there's OTCQX, OTCQB, and then there's the pink sheets, right? $24,600 for OTCQX, not millions. $15,000 for OTCQB. Application fee of $5,000. Okay, for the pink sheets, $2,500. Okay, so and there's some other charges here associated with monitoring. I'm not going to go into this level of detail, but you can see the difference in cost associated with going to over-the-counter for a company. And this is why I wanted to bring it to your attention, because there may be an opportunity to raise funding through the pink sheets or over-the-counter. These are the eligibility requirements associated with going through one of these levels. Okay, so for OTCQX, you can be listed on a qualified foreign exchange or be an SEC reporting company. Can't be a shell company or a blank check company. Can't be subject to any bankruptcy. There has to be a sponsor, which would be a market maker. Okay. There are reporting standards for SEC. Remember, this is the highest tier for over-the-counter. You need to have a board of directors that includes at least 2 independent directors. You have to have an audit committee, and a majority of the members of which are independent directors, because when you have a corporation, this is not for LLCs, it's not for DBAs, this is for corporations. Because when you have a corporation, you have a board of directors elected by the shareholders. The board of directors appoint the officers like CEO and CFO, and the officers hire employees. If you are the only shareholder in your corporation, then you have to serve all those roles. Those formalities don't go away, or else you might be subject to a piercing of the corporate veil, which means your protections against lawsuits might go away. So keep that in mind. Different roles. Shareholders elect the board of directors. The board of directors appoint the officers. Officers hire the employees. And you might have to serve all of those roles if you're a corporation. And of course, every corporation needs to have a shareholder agreement. Now, for QB, you have to have audited financials. You have to have a minimum bid price of a penny for your stock. Can't be in bankruptcy. Again, you have to meet an SEC reporting standard. Okay, so this is probably not right for the vast majority of the people that we see. But the application fee is only $2,500, and the annual fee is only $10,000. Actually, it went to $12,000 in 2018, compared to NYSE and NASDAQ. Pink sheets? No eligibility requirement. Not necessary. Application fee is $500. Annual fee is $4,200. You want to go public? Think about going to the pink sheets. Is all that clear? Erin, any questions about this?
No, it's super clear. You're doing really well. Thanks, Mike.
Okay. Now, in order to go to the pink sheets, there's a form that you have to fill out. It's a form issued through FINRA, which is, in this form is form 211. Now, I have a copy of the form later on in the presentation, but this has some information associated with the pink sheets, right? So you have to have at least 25 non-affiliate shareholders who paid cash for their shares at least 12 months prior to filling out the form. You have to have at least 1 million shares outstanding, of which $250,000 are free to trade. Can't be a shell company, and you should have current public information available. Okay, there's something called market makers. I have a list of market makers at the end of the presentation, and the form is submitted to FINRA. And if you satisfy all the requirements, you can go ahead and go into the pink sheets. Okay. And now here's more information about this rule. It's 15C-211 under the security SEC. You have to provide all sorts of information. All right. You need to describe your business and products and services, your facilities, name and location and square footage, who are the officers and directors that hold more than 5%, your certificate of incorporation, your bylaws, who your transfer agent is, and that can be handled through the market maker. Okay. I worked for GTE Government Services and I worked for the transfer agent, so I became familiar with how this all works. Okay. So there's all sorts of stuff you have to provide in order to go on, even on the pink sheets here. Okay. And go on some more. Discussions and negotiations concerning potential mergers and partnership agreements. You can provide unaudited financial statements, although I do recommend that you get audited financial statements, but you don't have to. You can provide unaudited financial statements. If there's been any private offerings, you need to disclose it. There's something called a subscription agreement, which will be drafted by your attorney. Okay. Again, details I don't need to go into, but the point is you do have to still provide documentation. Okay. Let's go here. And there's more. You know, a detailed, this is where we can help. No matter what you do, no matter what business you're in, even if you've been in business for 20 years, you need to have a business plan. And this is one of the things that that's in our warehouse. We can help you with the business plan. And we can help you in the description of the steps the company plans to take during the next year to execute the business plan. So it's not just having a business plan. You have to prove that you're taking an action against the business plan. Okay. You also need projections, which we can help with. You need agreements or letters of intent entered by the company, all the intellectual property stuff you need to provide, and you need a securities lawyer to help you out with this. And this is the actual form to be submitted to FINRA. I gave the link here, and I will provide this presentation to Lauren. And if you write to her, she will go ahead and send it to you. Plus, Lauren, perhaps you can put into the chat our link to our YouTube channel so people can see this. You already did it? Okay. So this form is actually not that bad to fill out. It's asking for basic information, name of the issuer, where, the number of principal executive officers, what type of security is going to be issued, where you're incorporated, who the transfer agent is. It's not that bad, but the market maker will help you out. If there's been any recent offerings, any foreign private issues, right? Any affiliations, and supplemental information that might help explain certain things, regulatory filings. It's a relatively easy form to fill out, but only do it with the assistance of the market maker or securities attorney. And then a certification at the end. By the way, FINRA is located in Rockville, Maryland. You may not be able to see that, but they're in Maryland. And down here, I couldn't list them all. It's too big. If you were to do this, first thing you would do is contact a market maker, and they will take you through this process. There's like 90 market makers. For example, in Salt Lake City, there's a market maker called ACAP. And in Stamford, Connecticut, it's AXGP. So you contact the market maker, and they would help you through this process. Let me continue on from there. I pulled this from a list. This is not all of them. This is just some of them. Okay. One down. And that concludes my presentation. Where do you sign up for? Okay, Lauren, why don't you answer the question? Where does someone sign up for assistance with a business plan? Why don't you answer that?
Can you hear me, Mike?
Yes, go ahead. Answer that question.
Oh, sure. So assistance with a business plan, honestly, you should reach out to your local SBDC center. Rhonda, I'm not sure where you're located, but actually, Mike, you have the slide right in front.
The El Camino one. This is the El Camino.
Oh, that's El Camino. Okay, got it. I
Right.
will actually put the phone number into the chat, but let me verbally say it. It's 866-588-7232. So if you are looking for assistance with a business plan or marketing, or you know what, you name it, we've got some help for you. So again, 866-588-7232, or please go to smallbizla.org/new client, and somebody will be in contact with you and get you set up with an advisor. Let me go ahead and put that into the chat, Mike. There we go.
Sure.
There it is.
Okay, so are there any questions concerning what I just went through? It's a lot of information, a lot of detail. The point is that possibly you might be able to get funding for your business if you're a corporation. By the way, not an S corporation, because S corporations can't have preferred stock. And preferred stockholders, there's an opportunity to attract investment to your business if you have preferred stock. So let me go into this a little bit because it's confusing to a lot of people. There are different flavors of corporations. There's the alphabet super corporation. There's B Corps and C Corps and S Corps, etc. You need to understand that legal structure is established through the state of California and every other state. In the state of California, it's the California Secretary of State. In New York, it's the Department of Corporation. You can have an LLC, a partnership, a corporation, a trust, all those types of entities established through the state. It is the federal government that establishes legal structure. This is vestiges of colonialism, because the Declaration of Independence states that these united colonies are and of right ought to be free and independent states, that we absolve from all allegiance to the British Crown, and that we are breaking all political ties to the state of Great Britain. It doesn't say that we're going to be a united nation. We're going to say we're going to be United States, and that the states are allowed to contract treaties and conduct war. Well, who can conduct war and contract treaties? Nations. So at the time the Declaration of Independence was signed, the thought was the states would be independent nations until we got the Constitution in 1787. It wasn't ratified until 1788. And that is where the federal government came into existence, Congress and the presidents. If you're in if you're in the country of France, you register your business with the government of France. And the government of France establishes your legal structure and your tax structure. We're the only country in the world that I can find where it's different, because we have these vestiges of colonialism. So you establish your legal structure with the state, not your tax structure. The IRS tax code is like an encyclopedia. It's thousands and thousands of pages long. There's a subchapter A and a B and a C and a D, et cetera, and a subchapter S. So when someone says that they have an S corporation, what that really means is that they have established a corporation through their state. It could be a close corporation, a professional corporation, or a general stock corporation. And they have elected to be taxed in the subchapter S of the Internal Revenue Code. They can elect to be taxed in the subchapter C of the Internal Revenue Code. So can an LLC. So can a partnership. So don't confuse tax structure with legal structure. But the manner in which taxes are imposed differ depending upon what tax structure you elect or you default to. To be on these exchanges, you must be a corporation. I'm talking about if you're going to sell shares of stock, okay? And many times, you might want to have preferred stock, which gives preferences to stockholders. Those who elect those who set up a corporation, a general stock corporation, the Secretary of State, that do not elect subchapter S taxation, that do elect subchapter S taxation, cannot issue preferred stock. So you can, so just keep that in mind. Plus the limitations. You can only have 100 shareholders for those who elect S corporation tax status. So therefore, you should not elect subchapter S taxation, or you should convert to a C corp. So you're taxed in a subchapter C of Internal Revenue Code. if you set up a corporation. Now, when you elect or when you default to subchapter C taxation of the Internal Revenue Code, the corporation is subject to double taxation. So think Coca-Cola. The dividends issued by Coca-Cola are taxed by the shareholders of Coca-Cola. Plus, Coca-Cola profits are taxed at the entity level. That's double taxation. So keep in mind, if you decide to go into the pink sheets, or at some point, you really make it and decide to go on NASDAQ, there's the double taxation issue. So always talk to a professional tax advisor and lawyers before you make these types of decisions. Even if you're just starting out, you set up an LLC, you should be talking to a tax advisor, but talk to us, because there's tax consequences associated with an LLC, and you can elect subchapter S taxation or not, even if you have an LLC now, because you can make that election at any time during the life of the entity. Whether it's you make the election be taxed under subchapter C of the Internal Revenue Code or subchapter S. That's available to partnerships, corporations, and LLCs. Okay, so I believe that's enough for today. Are there any other questions? No? Okay, then I'm going to wish everybody a good day. Thank you so much for your time, Lauren. And
Thank you,
hopefully we'll
Mike.
see everybody next week.
See you later. Take care.
Bye now.